Hello, YouTube. Two charts are broken, and our question is, will it spread to more, and who could be next? There was so much that happened today. I encourage you to watch all the way through to the end of the video because there are some huge market wins currently underway, and I'm going to make my best effort to try to explain things in about 10 minutes today. So at the beginning, we talked about two charts that are breaking down. Let's talk about what exactly those are. First one here is the Dow. And what I mean by breaking is that it's now poked below the 200 weekly and we got a lower low and a lower high. That is classic bearish. So now that we have a classic bearish price action, is the volume confirming it? Absolutely. We have red volume that is elevated for quite some time. So this chart is broken. It is now up to the bulls to fix it. They don't fix it, we assume it's broken. The next one here is the Russell 2000 or IWM. So when we look here to the Russell, what do we have? Well, we have the exact same thing. It lost the 200 weekly last week. It closed near the low of the week. We have another inverted hammer already, and it's even more bearish than the Dow. Why? It's also closing below last week's low, which means people have not been more bearish on the Russell than right now. The only thing that's different here is that we do have a slightly higher low versus our June area. When we look back to the Dow, we've already printed that lower low. So these two charts are basically broken. And our question is this going to spread to the Qs or QQQ and an SPY? Because they're pretty close here too. QQQ is probably the closest one. We note here that we got 272.45 as our 200 weekly. We still have an inside bar here though. So because there's an inside bar, we have not technically violated. Now, as we look to our final chart or SPY, this is important because we note that, that's right, the S&P is made up of 500 stocks. Some are technology, some are industrials, some are financial. So when the Dow was underperforming, but the NASDAQ is outperforming, what happens to QQQ? It gets mixed signals. So that's what we have here. S&P is actually holding up the best and has a higher low versus June. It's over the 200 weekly and also has that inside bar. So the question is what exactly happened today? And I'm going to try to just explain things without going to too many charts because it was really all about the US dollar and Great British Pound, but also the Great British Pound and also the Japanese yen today. So we note that the dollar has been on an absolute tear against every currency, but the US dollar versus the Japanese yen and also against the BOE had a huge move. The dollar is now over 114, and this is because of the size of the market. So whether you're aware of this or not, the Forex market or foreign exchange market is actually the largest one in the world. The foreign exchange and Forex market is the largest financial market in the world, larger even than the stock market with a daily volume of 6.6 trillion. Woof! Yeah, that's right, woof! That is a huge amount of money. And when we note that the US dollar, Great British Pound, from the low to the high, that whipsawed 5%. 85+% of all dollars in the foreign exchange market are going to be US dollars. So what does that mean? Well, it means that there were some huge moves happening. Those are hundreds of billions of dollars potentially. So yes, the Forex market is the biggest. That's the big dog. The second biggest one is actually the bond market, and the bond market is 119 trillion. And then we look to the stock market, which is actually about 93 trillion. So 93, 119, and that's in comparison to the Forex market, which is actually the biggest one. So this is so important because as we look forward to what actually transpired today, notably what happened on DXY, again, busting. This W led to a win. We're making new multi-decade highs, and it looks like we might even come back up and test as high as 120, which when I even mentioned that, it seemed a little high. I don't know how we would get there, but that's what technicals do. They give us levels of support and resistance, and if this, then that. So now that we note that our bear and bull market were largely due to DXY and TNX, we have to look at what the bond market is telling us today. Why? Well, it's moving massively too. We note that the 10-year note on the 1 week is now up by an additional 5.7%. It's almost a 4%. This is like something starting to break in the system. This is looking bad. Huge slingshot from about 2.5 up to 3.9, pretty much in a straight line. Things are really starting to get spicy. The 2-year note is at 4.3 now. Again, equal velocity went from basically 0 to 4. That's huge. So think of the size of the markets. And if we now look at SPY, it was really, really choppy today. And look at the last 10 minutes, like we talked about on Friday too. They stomped this thing hard. They stomped it down by about 3 points, or about 1%, right into the final 10 minutes. And it's been really choppy. There was huge moves all day. And that's because the S&P is actually the smallest of the three markets. Again, there is the Forex market, the bond market, and then the stock market. So the stock market, or what SPY is actually the one that is the least impacted. And when we're getting huge moves in foreign exchange and in bonds, those are both going to have a push-pull effect on SPY. And because the end of the week is not only going to be the end of the week, it is the end of the month. It is the end of the quarter. And on the rest of these weekly videos, I'm going to go through and explain exactly what normally happens into a quarterly rebalancing, which includes window dressing, includes options expiry, and everything else. But today, we just want to focus on what really moved because there's just so much to go through. So we're going to move forward here. Extreme fear, right? Yeah, extreme fear. And the market delivered, gave us more reasons to be fearful today. So what that means is that right now we are fish swimming upstream. Absolutely, we're fish swimming upstream. And there you go. There's the price action that confirms it today. We look at the bear market targets now. Well, where do we go to next? S&P is so far holding 364, but not by much. I think 362 is our 2020 low. After that, we got 350s. So let me just double check and make sure these numbers are actually still here. 358 is our 200 weekly. 351. So it should be 358 and 352-ish, close enough. So as of right now, it's like, well, it kind of seems easier for us to go down. There's probably a trap set. Which team is winning or who is going to win? I don't know. It's pretty difficult right now. So what do I do instead? I defer back to my notes. I defer back to my notes because today was probably a very easy day to get emotional. Why? It was volatile. You were right. You were wrong. Multiple times today if you were bullish or bearish. We were push-pulling all day. But when I look at here, my TA tells me that... Actually, I'm going to go through the fundamentals here really fast too. So even though the U.S. is largely focused on the fundamentals for America, and here we know that, again, in my opinion, the Fed cannot really do what they want to. They can't use both tools. They need to either have a higher mandate for inflation above 2%, or they're going to risk something. Something's already breaking. The UK stopped providing mortgages today. Why? They don't know what's going to happen in the future. So if they're like, yep, you can't buy a house anymore, man, like that's like something's breaking, and that could spread to America. So it's going to be so important as we look forward to the rest of the week. And again, please watch all the way through to the end so I can explain myself. But anyways, we're going to look here to fundamentals. Well, they're already kind of going to shit, to be honest. And we looked at the bear market targets. We're pretty much there. DXY, TNX, those are our main culprits for the bear market. And now we look at our technicals. Well, our technicals tell us that 2008 and 2022 parallels. Yeah, watch the weekend deep dive to confirm that. Algo says invest being short. Yeah, that kind of seems easy right now in hindsight. Just wait for the right rip and short it. Going long, SPY, until we get a weekly higher high, there are just no longs for me. S&P printed a weekly lower low and lower high. What does that mean? It means the path of least resistance right now is still down. It says it's a micro lower low, 36329, 36303. So are we going to save this area at that 0.1 like we have before? SOS bulls, if we're going to start going back up, SOS. Otherwise, this is likely going to lead to more downside. And what I want to look at next is going to be what actually really surprised me today. It's not just what's happening in the UK. It's not just what's happening in Japan. And by the way, the G7 is 7 countries. So I'm going to take a quick moment here to go through this. So there's the G7, right? The G7, which are largely going to be European countries plus Japan plus North America. Well, who is that? Well, we got UK, okay, Japan, yep, and then Europe, which includes France. And then we also got Germany. Boom, boom. That's like more than half of the G7 had a problem today. And when I listened to what Christine Lagarde said, oh my goodness. Can't say where neutral is, but determined to get there. Hey, I have no idea where we're going, but hey, we're going to get there. Let's do it. And that was right after the market opened at 7 o'clock. Why is this important? Because tomorrow she has a chance to clarify. And she's going to be talking with the king, Jerome Powell, at 7:30 a.m. tomorrow. So whatever they're going to talk about, I don't know. It just seems like there is a frantic panic in the central banks right now because they're trying to do things that just do not work. You cannot be printing money and want a strong currency at the same time. The famous quote is that the US dollar is our currency, but it is your problem. And that's definitely what these other G7 countries are dealing with right now. It is a big problem. So if we look here to the heat, actually, I'm just going to skip the heat map. I'm going to look at one more chart. And then we're going to, then we're actually just going to wrap up here. So the last things I want to look at are just going to be SPY and QQQ, or the Qs, on the one-day chart. That's because we note here that we want to exercise patience. And by patience, I mean that there's likely going to be a relief rally for us to fill the gap here. So when we're finally going to get to that relief rally to fill the gap, it could be into the quarterly expiry coming up on Friday. What I'm paying very close attention to is whether or not we're going to keep rocking this lower downtrend, or if we can actually push off and form a daily higher high on SPY, not just on QQQ, because we are due for a bounce here. We carved out a bottom, then we shot up, and that's what I could see happening. Is it a guarantee? No. The path of least resistance is still lower. On the QQQ, we're already at the green line, though. We're already at the 200 weekly. So if S&P keeps going down to my green line, well, that means the QQQ is broken down. It's joining the Russell, it's joining the Dow, and we're probably not going to get very much relief. QQQ filled its gap today. So if it wants to resume down more healthily, it can do it. So with that said, if you want to know more about how we got prepared for this week and where we could potentially go, I encourage you to watch the weekend deep dive, which I'll queue up in a moment right now. Otherwise, thank you so much for watching, and I look forward to seeing you tomorrow. Thank you.